Hi there, welcome to the weekly edition of Your Trades, and I'm Snehi Shah. This is a show where we'll be summing up the trading week, the week that we've had, and what we can expect heading into the next trading week. Let's touch upon what this trading week looked like. Nifty continued its 2-week gaining streak, advanced for the second straight week. You had names like Tech Mahindra and HCL Tech lead. Good set of numbers coming in for both over the course of the week, and both of these have kept the street abuzz over the course of this week that went by. Nifty Small Cap advanced for the third week in a row, although we've seen massive cuts coming in across the market in Friday's trading session on the back of all the geopolitical instability and tensions that we've seen build up between us and Pakistan. But you still had Nifty Midcap that closed in the green for the course of the week. So overall, on a weekly basis, barring Thursday and Friday's trading session, we seem to have done pretty okay for our markets back home, given that US was rather volatile and you also had Asian markets that were rather choppy as well. So the global handover was not very supportive. We seem to have done well for the first 3 trading days, but ended on a choppy note on Thursday and Friday. Let's talk about Nifty IT. That index was the biggest gaining sector in this week, up 6%, more than 6% rather. It was the top sectoral gainer that was led by Tech Mahindra and Coforge. All constituents of the Nifty IT Index have ended in the green this week. No surprise, because the IT basket has done pretty decently when it comes to its numbers. Nifty Bank also hit its new record high this week, but sharply receded from those levels as well. AU Bank was the stock that stood out from the Nifty basket. Nifty Realty, Nifty Pharma, Nifty Auto hit their 2-month high as week, and Nifty Metal also advanced for second week. Vedanta, Nalco looking good. Nifty Energy hit its 3-month high this week as well. So that's a roundup on what the market has done overall. It's been a strong quarter so far for banks, barring Axis Bank, because when you take a look at the first cut of the numbers, they look rather great. It's the management commentary that and the credit cost outlook for FY26 that has got the market a little spooked for Axis Bank. Over the course of the week, the stock is down 2%, and then Friday's trade it was trading with cuts of more than 5%. Growth optimism has aided IT, top sectoral gainer this week. All eyes are going to be on next week's Nifty earnings. You have the Bajaj twins, Bajaj Finance and FinServ. Remember, for Bajaj Finance, you also have a bonus issue and a stock split announcement that's expected on the street on the 29th of this month. Trent, Ultratech Cement also Nifty companies that will be reporting numbers next week. Let's talk about everything that's happened on the tariff front so far. We've got news that China and US have negotiated. They have sat down for talks, and Trump has said that they are ready to cut tariffs against China. So this is something that has eased global pressure a little bit. Gold has retreated from record high. It's near its 3-year low as of dollar is near its 3-year low as of now. Gold has cooled off slightly on the back of equities once again finding their footing. IMF has lowered global growth outlook for 2025 and 26 on the back of the tariffs that we are seeing. Indo-Pak tensions have risen after the Pahalgam attack, and on the back of that, India has held its Indus Water Treaty in abeyance. So much has happened in the course of the last 5 days. Markets have been volatile. Nonetheless, we've ended the week, at least on the Nifty, in the green. To discuss more about the action that we saw and more importantly, the action we can expect heading into next week, let's welcome on board Rajesh Palvia, Head Technical and Derivative Research at Axis Securities. Along with him, we also have Mr. Ajay Bagga, who is a market expert, joining us. Good afternoon to both of you, gentlemen. And Mr. Bagga, I have to come to you first because we need to make sense of the market impact of all the geopolitical tension that we're seeing brewing between us and Pakistan. It's expected to escalate going ahead as well. We have held the Indus Water Treaty in abeyance. Tell us the impact of all of this in terms of geopolitical stress and also how this would impact our markets. What can we expect heading into Monday, given we still have a couple of days before the next trading session, and the kind of news flow we can expect to hear over the weekend?
Yeah, I think after that opening segment of yours, I wanted to say have a happy weekend and move off, because you have covered everything quite substantively. Uh, Looking at the geopolitical tension, we have to see what happened during the Uri strike and the Balakot strike. So between the terror strike and the Indian retaliation, the time was about 10 to 15 days, 10 for Uri and 15 days for Balakot. So you can expect that over the next 2 weeks, there will be a geopolitical event. That is what is the overhang on the Indian markets. Otherwise, based on the trade wars de-escalating and the risk sentiment improving, We have seen Asian markets doing much better. We have seen European markets recover quite well despite slowing growth in Europe and still no visibility of Europe signing a deal with the US. And US markets, of course, we have seen the previous 3 days a sharp recovery. Even in the big tech, the Magnificent Seven have rallied upwards. So overall, global risk on has improved slightly, and we are seeing hopes of some kind of a trade deal. Still, the China one, I think there are two narratives. There is a Chinese narrative which is calling Trump's statement a fake news, that they're saying nobody from our side has engaged with the US counterparts. Trump has said we are in discussions with the Chinese and we talked with them even this week. So one doesn't know where exactly is the reality, but both sides hopefully will strike some kind of a deal or at least de escalate from the present tariff level. So, India, all the tick marks are there for a continued recovery in the Indian markets. We have outperformed in March and April. Expectation was that that would continue. However, the geopolitical overhang, and it's anybody's guess when in the next 10 to 15 days you could see some geopolitical event on the Indian subcontinent.
Hey, Mr. Bhagat, thanks for that view. Rajesh, I now want to bring you in and get your perspective on what we can expect to see in terms of levels in Monday's trading session, given everything that has happened on the geopolitical front, how our markets have reacted over the course of the week. We've largely had a mixed week. Yeah, sure, we've emerged in the green, but largely it's been very volatile for us. Do you see this volatility continuing going ahead into Monday's session, or can we see a better session than we've seen on Thursday and Friday?
Definitely volatility would be there. So the beginning of this May series started at a cautious note, as we have seen that Nifty rollover stood at 79% compared to last 3 month average. It's below last 3 month average, and there is a shedding of around 12.50 lakh shares in this Nifty open interest for this new series, as well as the same behavior we have witnessed for the Bank Nifty also. Bank Nifty has also shown shedding of around 7.50 lakh shares for this new series. So I think investor traders are little cautious for this geopolitical tension which is escalating. So I think and again in today's session especially we have witnessed that profit taking in a broader market. Most of the sector have corrected. The major hit we have seen in the banking and financial, as there was a sharp up move in last couple of weeks for banking stocks. So I think here we have seen a significant profit booking. But Nifty is just close about to 200-day moving average, which is placed at around 24,000 level. So I think if we breaks below 24,000 level, then there is a possibility of further more profit taking in the market in the coming week, and possible down move can extend towards 23,800 to 23,700, which is the next important major support area. In today's session, the major call writers have shown activity at 23,000 24,300 strike price, as well as on the put side the major base is now taking place at 24,000 followed by 23,700. So I think below 24,000 the another 200 300 point correction we may see in the Nifty. But for Bank Nifty, in today's fall, Bank Nifty has filled the bullish gap area which was there in 54,400 to 54,700 zone, and that gap is already filled by the in the today's fall. Now for Bank Nifty, if it's a slide further below 54,500, I think then we may see further more cut towards 54,000 level. That's the next major support area for the Bank Nifty. On the higher side, the major call concentration area is now placed at 55,000. So that level may act as a major supply zone or resistance in the near term perspective.
And so those are the key levels to keep in mind for next week's trading session. Mr. Baka, I just want to bring you in the conversation and also get your view on our GDP growth outlook. The RBI pegs our outlook for this year at 6.5%. You have IMF that's come in and slashed it to 6.2, World Bank to 6.3. How much, if at all, do you agree with these growth estimates, and do you believe, factoring in everything that we're seeing in terms of geopolitical tensions right now, what do you think is our growth trajectory for this year going ahead?
I would go with the RBI number, but definitely there is an impact of the trade war. So that's still a lot of it is to be closed out. Our bilateral trade agreement will probably happen by July end to September sometime. We should be able to sign that. Even this 10% tariff will have some drag on the Indian economy. Overall sentiment around the world is on a stop basis, and the IT order flow has reduced a lot. The kind of momentum that we see that is lacking as far as the management guidances have come. So I would go with the RBI number right now, but I think it will trend lower as we go towards the second half of the year. The good news is the rate cut transmission will happen. That will lend a leg up to the economy, and we are expecting two more rate cuts still in this calendar year. So that's going to help us. Overall, the domestic economy should be okay. It's looking like a normal to above normal monsoon. But as you mentioned, the geopolitical risk with Pakistan stays quite elevated, and it will depend a lot on whether it's a one-off event or it becomes a wider conflagration. If it becomes wider, then there could be an impact on the GDP. But I would say we are probably looking at something in the range of 6.3 to 6.5 as of now.
Okay, so that's the view on where we can expect our GDP numbers to be headed and our growth to be headed for this year. Rajesh, coming to you, want to get your sense on the Nifty IT Index, because we've had major Nifty companies from this basket report its numbers already. It's been a largely mixed set, but it's not been all that bad either. Do you believe, after the kind of correction that we've seen over, let's say, the last 6 months or on a year-to-date basis as well, do you believe that now this sector on the charts is ready for a run up and the consolidation is behind us, or is there some more room for consolidation as we go ahead?
So I think we have discussed last week also, and we have seen very strong relief from the recent low of Nifty IT, and almost Nifty IT has recovered almost 10% from its recent low. Looking at the recovery in the large cap as well as in the mid cap IT stocks, I think the results impacts are already priced in most of the stocks at this juncture, and I think some of the stocks from the large cap universe, like TCS is looking promising, as well as Take Mahindra. These two stocks are looking promising at this juncture from the large cap IT, and from mid cap, I think Coforge and Persistent can be looked at, as both stocks have shown very smart recovery from their recent low, and looking at the near-term structure, both stocks are now negotiating with its their 50-day moving average. So I think we may see some consolidation in IT stocks, but going forward, I think if Nifty IT manages to sustain above 34,500, 34,800 zone, I think this rally may extend further, and possible target for Nifty IT we could see towards 36,800 to 37,500 kind of zone. So I think in a couple of weeks would be interesting for IT stocks, and I think we may see another 3 to 4% kind of up move from here onwards.
That's the take on what Nifty IT is shaping up to look like on the charts. Mr. Baga, of course, it's really unfortunate everything that's happened up north with terms to the Pahalgam attack, but want to get your sense on the market impact, if any of this, in terms of how you are viewing the defense group of stocks now. Do you believe that this could have any impact on the defense group of stocks, given that now India would ideally look to strengthen its arsenal of the kind of artillery, the weaponry that we have? What is your outlook on the defense pack, on the back of everything that's happening?
Very, very true. I think overall global geopolitical risk is elevated, and then we have this issue of this terrorist massacre in Kashmir. So both will lead to higher defense outlays and ratcheting up of immediate defense production. So defense stocks will do well in this kind of a scenario, and we are expecting India to spend more to increase its defense preparedness. So defense stocks are a good sector to look at. Around June, we saw the correction setting in on the base of valuations being quite elevated. Then we saw a good correction, and now again they are finding favor over the last 3 to 4 weeks. I think that should continue, and our defense sector should outperform the market.
Okay, so that's the outlook on the defense pack. Rajesh, help us with some of the stock specific ideas that you're liking right now. What's looking good on the charts?
So the two stock idea. One is on the long side. Grasim is looking promising. The way stock has shown outperformance in this volatile market, stock is continuously making higher top, higher bottom formation. And looking at near-term, short-term structure, we believe that Grasim can extend its gain. 28.10 we are projecting target for Grasim in the near-term perspective. So one can buy this stock with stop loss of 2690. On the short side, the stock one can look for going short. That is Voltas. After today's decline, I think stock has broken its upsloping trend line on a weekly chart. Short build-up is there in the data. We believe that Voltas can extend its down move, projecting target towards 1190. So one can go short in Voltas future with stop loss of 1258.
Mr. Bagga, before we wrap it up on the show, if you could just help me understand how we are positioned now to the world in terms of foreign ownership coming into India, because after the correction that we had a big pullout coming in from FIIs. We've just seen some flows coming in, and once again this volatility that we're seeing in the market. Where do you think we're placed in terms of how we are looked at? Do you believe that this correction is going to provide an opportunity to FIIs to see us as a buy on dips market, or do you believe that we are still very highly valued for the FIIs to make their comeback?
We are looking quite attractive. We are reasonably valued, is what I would say. And if you look at where the FIs are really coming in, they have been going more into the value-based sectors, and they've also gone down the capitalization chain. So quite surprisingly, the FI holdings have increased in a majority of the Nifty mid-cap and Nifty small-cap index. More than 50% of them, of those stocks, have seen FI holdings increase over the last 3 months. So clearly, we are finding favor. We are seen as a resilient market, but we are not fully insulated in case there is a global recession. As we saw in 2008, we held our own for some time, and then we were very much a part of the falling dominoes globally. So right now, I think we are looked at as an attractive market. The issue with Pakistan has made the environment partly cloudy with more or less a guarantee of some kind of rain. Now, how widespread is that rain becomes an issue, and given that there could be some holdback from FIs wanting to come into the country, they would like to see how things work out. And then again, but the fundamentals of India, of the Indian market, remain quite good. Valuation wise, we were never cheap. We were at a premium, but I think now we are quite reasonable given the outlook and given what we offer in a very volatile world.
Well, appreciate that view coming in, Mr. Bagga. Rajesh, thanks so much for joining us. We wrap it up on this edition of Your Trades, and we'll let our guests go on that. But just a little bit of an outlook on what we can expect. What are the major cues to watch out for next week? GDP, PCE index numbers coming in from the US, GDP numbers coming in from Eurozone as well, along with CPI. For our markets next week, we do have a bit of a constricted week coming in, because on the account of May Day, our markets are going to be closed on 1st of May. So industrial production and PMI numbers is what we're expecting next week. So far, we have eyes on 4 Nifty companies set to come out with their numbers next week. You have Bajaj Twins along with Ultratech Cement, as well as Trent, that's going to be coming out with its numbers next week, along with a bunch of broader market numbers as well as coming in. Lots of fundraising is going to be happening next week. The likes of UCO Bank, NTPC Green, Bank of India, Mass Financial. You also have a stock split that's going to be mulled by Bajaj Finance along with the bonus issue. These are all the important cues to watch out for next week's session. But on that note, we'll wrap it up on this week's session of Your Trades. From me and the team that put this show together, thanks so much for tuning in. Stay tuned to ET Now for more news and updates.